Hello guys, welcome back to the channel. Today I'm going to be teaching you something special and something simple that you guys have been asking. Many people have been asking me about how to draw support and resistance very well. Like, how do you draw your support and resistance? How do I draw my support and resistances? And I'm going to be teaching you how to draw support and resistance today, such that you can draw them accurately. And remember, support and resistance is one of the oldest strategies that have been used in forex, together with trend lines and Fibonacci retracement. Support and resistance has always been there, and it is still being used up to today as we speak right now. So what is going to happen is I'm going to teach you how to draw them very well in under 10 minutes. So stay around as we draw, as I teach you how to do support and resistance. Let's go straight to the charts. Oh guys, before I go to the charts, it is a norm here. First, subscribe to the channel so that we can continue with the video. So I'm going to give you 5 seconds. Subscribe to the channel so that we continue with the video. Okay guys, subscribe to the channel. 5 seconds. Okay, there you go. I hope you're done. So on the screen you see a RGPY and my support and resistance already drawn. So I'm just going to be going to the watch list and get new pairs such that I can show you from the start. And I'm going to I'm going to touch on the forex pairs. That is EUR/USD, that is the most traded forex pair, and then crypto, that is BTC/USD, and then indices, commodities, we have Tesla, and then indices we have the US 100. So I've chosen 4 different assets just to show you that you can draw support and resistance on different assets, as long as they're using the line chart, they're using the candlestick charts and their own trading view. You can be able to draw support and resistance accurately, and I'm going to teach you how to draw them. So first thing first, you're going to go straight to forex, because many people trade forex. So the pair that I've chosen is the EUR/USD, and this is the pair that we are going to be starting with. So I'm just going to clean everything from the EUR/USD, and then I'm going to show you how you can draw your support and resistances. So the pair you're seeing is the EUR/USD, and this is the monthly time frame. EUR/USD monthly time frame. The broker or the chart provider is the Owanda here. So now, first things first, when you're going to draw your support and resistances, you need to draw support and resistance from the high time frame. So why do you need to draw from the high time frame? It's because the high time frame support and resistances, they hold more than the ones on the lower time frame, and I'll be showing that to you in a second. High time frames hold more water than the ones on the lower time frame. What do I mean? That the support on the high time frame is more highly going to be respected than the ones on the lower time frame. So what happens is, price, when price reaches that area, it's going to, chances are high, it is going to bounce off, and you can trade only this strategy using only support and resistance, and you can be profitable, provided your risk to reward is good. Yes, I said it. You can only trade support and resistance and be profitable, provided your risk to reward is good. Okay, so now, first thing first, what do you want to see before you start drawing your support and resistances? You want to see a place or an area where price has hit 2 or more times and has been bouncing off that area. 1 time can be enough, but it is not enough. At least 2 times, and price has been bouncing off that area, then that means that is a strong area of support and resistance. So on the chart here, we have we have the Euro USD chart, and this is the monthly time frame. So the first thing, you're going to go to the line chart. When you go to the line chart, look at areas where price has been bouncing off many times. That is the area you're going to first mark. So what are you going to use to mark? In the beginning, you're going to use the line tool, this this horizontal line tool. Just get the horizontal line tool and mark where you see sharp turns, but many turns. So the first one we see is here. Why? Because we see price hit here and went up, and then we have another one. It came back and hit the area and went up. That is the first one. Then the second one we are seeing here. I hope you see it. Price hit here the first time, went up, second time went up. Even this one is counted because if you turn to the candlesticks, you will see that wicks touched there. You see, wicks touched there and went up. Here used it, here used it, even here tried to go below but didn't, still turned around. So that area also qualifies. So come, where do you see again? Here. You see, price hit here, went down, hit here, went down, hit here. If you turn the candlesticks, this area touched there. You see, if you turn the candlesticks, touched there. Then here, then here, then here, then here. So this is a very strong pivotal point for Euro USD. And you see, now that it has broken here, it has not gone here and it has broken here, just as a height might come here. It might, that is the word. So the next you come and put here. Why here? Price used it here, used it here, used it here. And even here, when you turn to the to the candlesticks, you'll see that the wick tried. Okay, this one did not reach, but we have one that reached there. So we already have 4 areas. I'll even put up here one like that. Go to the candlesticks, you see this wick touched the area. Okay, now, so we have how many lines on the screen? We have 1, 2, 3, 4, 5 lines on the screen as our support and resistances. Why do I call all of them support and resistance? Because this support can act as resistance. If price breaks down, it acts as resistance. I'll give you an example here. Here it acted as support, isn't it? It acted as support. So when price broke down, it turns automatically into resistance. So if it is broken, it has to be retested before it goes up. Same thing with here. Here it acted as support. This is a clear one now. Support, support. Price broke down, then acted as resistance, resistance. Price dropped down. So we have 1, 2, 3, 4, 5. So now the next step is to look where price action is current, because you don't need to have your your chart cluttered with a lot of lines. You're going to be confused. So you want to look where price is at current. So those are the support and resistance that you need. So where is the current price action? It is here. So that means the one we need is the one down and the one up. So the rest, these ones, we don't need them. So we shall delete them. Why don't we need them? Because they are very far from current price action. So if they are far from current price action, that means price action reaching there, it will take even a month, because this is the monthly time frame. Price to move here, from here up to here, it will need like 1 or 2 months to reach here. So from here up to here, where the next resistance was, it will need like 6 months. So you're not going to be trading for 6 months. You trade where the price action is current. Good. So now these are the relevant support and resistances that we need, isn't it? These ones here, the relevant we need, this one and this one. So now that you finish with the monthly, go to the weekly to refine them. The weekly is only for refining them. So now the weekly, what do you see? Do you see more support that can be drawn on the weekly? Go to the line chart, or as usual, always first go to the line chart. You see how it is clear now? You see how, guys, you see how it is clear? This is resistance, support, support, resistance. You see how it is clear now. So you go to the weekly and see if there is any immediate you can draw. For me, I can see any immediate. I'll draw them and then I'll show you. So get your line and put it there. Why are we putting it there? Because the current price action is around here and has just broken this previous resistance, which turned into support, which will turn into support. So we draw that one. Which one else can we draw? Can we see? Can refine this one to here. Which other support can we see? We see one down here. There it was used as a support here, turn to the, you see the wick touched there. So it was real support here, and then resistance here, broke out, came resistance with these 2 wicks. This is a wick here, and there's a wick here. So support, resistance. So you remove this one that is far. So before you even get here, we first get here. Okay, so now you have 3 lines on the chart. So which line do you want? Which lines do you need? We need all of them. Why? Because they are all near price action. And I'm using lines just to be precise. Okay, so now what do you see? So we can put it here. This is a head, shoulder. So we can put it there. So price is coming here. The way it looks, it is coming there. Okay, what else do you see? You see that this was the resistance, price broke out, retested here, and now it is looking to the upside. This was the resistance, price broke out, retested, it is looking to the upside. So you're expecting price to come up. This is an engulfing candle, we're expecting price to come up. However, price can decide to go down, so you never know. And this one was support, price used its support, went up, broke out, used the resistance, and now it has broken out up to here. So now you have your support and resistances drawn out. So now that you know where they are passing, what you can do, you can remove the line charts, remove the lines, not the line chart, remove the lines and substitute them with the rectangle support and resistances, just to make it look better and realistic. So you put those ones there. These are the ones that you normally see me using. So just duplicate, put another one. It was around here, yes, and duplicate. Put another one. It was there, yes. So now that looks like support and resistance. You see price hit, fell down, hit, fell down, hit, fell down. Now it has come here, broke out, retested, so it is looking up. When you come here, price hit here, went up to here, hit here, went up, came, did not touch, then hit here, tried to go up, the momentum was not there, dropped down, used it as resistance, and then broke out. So it has come. We're expecting it to come down, but it broke out, retested, so now it is looking up. So we are going to see what price is going to do from there. So now that is your support and resistance on the weekly. So you leave your support and resistance there. When you go to the daily, you're just working out with what you already have. You don't move them, leave them there. Okay? In the future, price action might change. You might need to draw other ones, you might need to adjust, but don't worry. These ones that you have drawn on the weekly, from the monthly to weekly, they are always strong and they are always going to hold price action for some good time. So you can work with that area there. Okay, so now we are going to go to another commodity. So that was Forex, Euro USD. So we are going to go to BTC. This is now crypto, BTC. As usual, we are going to start from the monthly time frame. I think by now you now have a clue on how to draw them clearly. So monthly time frame, what do you see? First, mark on the areas that pop out. There is this one here, 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 there is this one here that has been broken on monthly time frame. So come to the candlesticks. You see this one was retested, dropped down, then broken out, then retested. After being broken out, price came, retested on the area, and then went up. So this one tested once, tested twice, went down, then broken, tested again, went up. This one tested once, went up, came down, tested it, went back up. This one tested once, went down, then it has been broken. So is this kind of closing as as a bullish candle, it is going to count as a rejection down here? We don't know. So now what do? We said we remove these ones that are very far from price action. Remove them. Why do we remove them? Because we don't need them. Price action to move from up here to here, it will need like 4 months. 4 months, and we don't think price is going to move down for that month. So the only ones you need is this one here and this one here, because they are near price action. So go to the candlesticks, you see. So price came for 1, 2, 3, 4 months, reached here, it stopped, came down to retest this area here, and now it is looking up and has broken this previous area. So that means we are still in an uptrend. This is a higher low, higher low, higher low. It is like putting in another high. That is BTC on the monthly time frame. So come to the weekly to refine now the zone. So what do you see on the weekly? On the weekly, we are not just this one to here, add just this one to this area here. You see, now this is a high, a low, another high. Weekly, these are 3 weeks of price action breaking this area here. 1, 2, 3, breaking this area. So we are putting in another high on the weekly. So what will happen is, after another high, we shall expect a retest on this price area, and then we go up. So what do? We got the line chart, and we want to substitute these lines with the proper support and resistances to make it look realistic. So you substitute those lines, and then you remove the line. Okay, then remove this line, and then just duplicate or clone, and then put this one here. Good. So now you're good to go. Can go back to the candlesticks. So that is your support. You see, when price hit here, came down, hit it again, and then came down, hit here, went up, hit it again, and then went up. So we're expecting when it reaches here, it can come down. However, wait for confirmation. If it is not there and it breaks like it has broken, we don't buy. If it has broken, we wait for a retest, and then we shall buy to the upside. So now, why do we say this support and resistance is strong and correct that you can use it? You see, price came. This is the weekly time frame. 1, 2, 3, 4, 5, 6. 6 weeks price hit here. It bounced off. 1, 2, 3, 4, 5, 6. It took another 6 weeks to come and hit here again. It closed a very big rejection and bounced off. And look where it went. Moved up to here. How many pips are here? It bounced off for 2,000 pips. 2,000 pips up to down here. So it came first week, bounced off 1, 2, 3, 4, 5. It came after 4 weeks. It came back here and it also bounced off, and it moved another 2,000, almost 3,000 pips up. So the support and resistance here is very strong. So you can use this area to play around with your support and resistance. You can go to the daily. You see, when price reached this support here, it consolidated for how long, and then broke out strongly with this bullish engulfing candle. Price came to the demand zone to pick orders, and then it has gone up. It has looked like it was retracing, still it is going up to the upside. So You can be using that, and that is for Bitcoin, that is cryptocurrency. You use the same procedure to do the support and resistance. So I'm going to go to the commodity here. This is Tesla. Yes, just delete every rubbish here. This is Tesla. This is the monthly time frame. What is the first thing to do? Go to the line chart. So line chart, draw the areas that you see that pops out immediately when you're on the chart. Those are the areas that you're going to draw the line on. Those are the areas that you're going to draw the line on, the ones that pop out. Good. So what do we have here on Tesla? We have 1, 2, 3, 4 areas that pop out. So when you go to the candlesticks, you see price came here, tapped here, this was resistance, this is support. Price broke out, retested the support. And you see guys, whenever price break, that's why I told you, you can trade on the support and resistance and you can be profitable. What matters is risk to reward. You see, when price broke out of this resistance, it came to retest, and then after it broke out from another resistance here, came to retest this resistance, then went up, came to retest this resistance, this one that's broken here, then still went up to this resistance, rejected, and came, broke down here, went to retest, came down up to down here, broke up of this resistance, retested, went to this resistance, retested. Price keeps playing around with support and resistance like that, and then retested this one here, then went up, broke out. You see, even here it had a hedge, then it went up to this resistance here, looked like it had broken up, but the breakout was not clear, rejected, came back to this resistance that was broken. It has retested, now it is looking up. When it has retested, it is looking up, it is coming back here, guys. It is coming back here. Support and resistance trading is simple and straight to the point. You just have to use risk to reward. The better the risk to reward, the more profitable you're going to become on support and resistance. And what you have to know is that every strategy has losses, every strategy has winning. There is no strategy that has 100% win rate. It is the risk to reward that plays out for you in the long run. So now, what do we need? The next step is, first step, go to the line chart and then draw areas that pop out with the line chart. Second step is come back to the candlesticks and then remove areas that are away from price action. Remove areas that are very far from price action. Then remain with areas that are near price action. Third step is go to the weekly and refine the margins. So the weekly, where do you see? Here the weekly, this one is okay. We can just refine it to here. Go to the line chart, refine it here, and then this one, put it here. And then someone will say, oh no, why are you putting it up? Or no? Guys, this is support, then broken, it turns into resistance. So this is the first area price will reach before even coming up here. So this is the first area price is going to reach. We mark there. So after, come back to your candlesticks. So now you have where to trade or what to trade with. So you replace this with proper support and resistances drawn to look realistic. You can use your rectangle tool and remove these lines. You don't need to have your lines cluttered, so your charts cluttered, so you remove those lines. And I teach you these things, guys, for free, totally free. All you just have to do is watch the videos over and over again, and then you'll be able to learn them. So when you come to the daily, what do you see? The daily is a little bit cluttered, but still it is showing the same thing. This is support, came here, broke out, retested, and went up. Same things. Breakout, retest, go up. Breakout, retest, go up. So if you wanted to enter into this trade, this was used as support and it broke out. When it came to retest this area here, you entered and then targeted up. Price is going here. That is why it's most likely to reach first point. This is so low. This one here, most likely to reach there. So you'd be in all these profits up there. So that is Tesla. So now we are going to the last one, which is indices. US. This is called what? US 100. Okay. Indices. So this is the monthly time frame. What do you do? Same things, just repeat the same thing over and over again. What do you do? Go to the monthly time frame and go to the line chart. First thing, line chart. So what next? Draw those areas that pop out. We have this one here. Train your eyes to see them, and the more you train your eyes, the more you be on the chart, the chart is going to be for you to notice them. Areas that pop out, areas that pop out, areas that pop out. Guys, this kid is making noise. Okay. Okay. So we are there on US 100. So what are you seeing? We have 1, 2, 3, 4, 5 areas that pop out on US 100. Monthly time frame. Monthly time frame. So now what happens is we are looking for areas that are near price action, because we said price to move from here where it is to down here, it will need another 1, 2, 3 months. And for us, we are trading at least in the current month, so we remove these areas that are far. I hope guys you are learning something. So these areas that are far, we remove them and we remain with areas that are near price action. That is here and here. And guys, look, this is looking like a double top on the monthly time frame. So we're going to wait this monthly candle. If it does not close above, this resistance here, we might be selling the US 100 up to here. You see, when you're using support and resistance, by the way, let me even include this on my watch list, US 100. I'm going to include it there. So if we do not close above, we are selling the US 100 up to here. Just let's keep watching how we have 4 days to go. So in these 4 days, we don't close above the support, the resistance. Next month, we should look for setups to sell the US 100. So now we are here. So we drop to the weekly time frame. Weekly time frame is only for refining. So what do you see on the weekly? Go to line chart. You see, one is there, and then we shall need another one to put it up here, I think. So this is looking like a head, like a shoulder, a head. This is looking like another shoulder. And then this one, we can refine it. I wanted to put it here, but there is nothing to the right, so this one is the most appropriate. It was used to here, support, broke out, resistance, broke out, support, then support, it went out. So it came and broke, then resistance, then support, it went up. Okay, so what do we have here? This one we are going to delete it because it is still far from price action. So what do we have here? We are going to replace this with the real support, just to make things clear. The charts look neat. Remove the lines and then clone this one, put it up here, remove the lines. So what do we have here, guys? We have price came, we tested here 1, 2, resistance, then broke out, used it, support, went up, came here with a big rejection, used it as support, went up, used it as support again, went up to here. So it has been using it at the support. So I think this one, let me adjust it up to here. There, I'm not expecting price to cross above here. So it is, price came here, went down, went down, broke up, but did not last long. It came down up to here. So now it has come to this area. So expecting price to test there 1, 2, 3. So this candle might go up to here, but it's not going to close above. That is what I'm expecting. So US 30, we might be headed for sales because we are seeing double top on the weekly, on the monthly time frame. This is a head and shoulder. On what do you see on the daily? Daily is also a head. Daily is a head and shoulder. Double top on the weekly. This is a shoulder. This is a head. This is going to be another shoulder. Double top on the weekly. Double top on the monthly. You see? Let me just work on it. Double top on the monthly. If you put your RSI, you're going to see a divergence here. Let me get for you the RSI indicator. This one here. I rarely use it. But this is just to show you. You see this top here? Let me put the line chart. You see this top here? This top here? This one here? You see it is up. But look at this one. It is the same top at the same level, but look at the RSI. It is down, way down. It is showing you that it is lacking momentum. Let me draw for you. Where is this one here? You see? You see this top is slanting down, but this one is on the same level. So it's telling you that this bullish movement here is lacking momentum, and we are going to, we might be heading to the downside. So that is on the monthly time frame. So when I go to the weekly, where I'm seeing a head and shoulder on the weekly, so you can also use the RSI. You see this top here? It is going to show like a double top, but you see this one is high, this one is very down, and that is the weekly. So the RSI is still showing you that this top here that is going to form here has low momentum compared to the previous top. So it is a sign that we are headed down, and that is the weekly time frame. So we are likely to sell the US 100 stock. And you see we have a double. No, not a double top. This is another shoulder. This is a shoulder. This is another shoulder on the weekly time frame. So when we come to the daily, signs are showing us we're going down. When we come to the daily, what do we see? Daily, now the head and shoulder is clear. This is the shoulder. This is the head. We went down, and now we have come here. So I'm expecting this week we can come up to here, but we are not going to close above on the US 30, and then we are going to be heading down. On the daily, do you have anything on the RSI? Nope. Okay, so when I go to the 4 hour, what do you see on the 4 hour? You see on the 4 hour, we are making higher high, higher lows, higher high, higher lows. This is a lower low, and we made a higher high. I want this thing to be clear. Good. We made a higher high, higher high, higher low. Guys, that kid is making noise for me. Higher high, lower low, and then we came back, made another high, higher than this, and then we made an equal low, but this time we made a lower high and then a lower low. So this one is also looking like a lower high. So on the 4 hour, looks like we have already started selling the US 100 on the 4 hour. 1 hour, what do we have? I rarely reach to the 1 hour, but just to see what is going on. 1 hour, don't have anything. So, but on the 1 hour, I see I have a supply zone here on the 1 hour. So we can wait for price action to come there, and then we can enter for a sell. That is on the US 100. Okay, that one, let's leave it. But the main point is, have you known now how to draw your support and resistances? Well, okay guys, I'll end there for today. I hope you've learned something. If you have not learned anything, kindly go through the video again until when you get something. Subscribe to the channel, guys. Subscribe to the channel, because I'm going to be giving a lot of content of these basic things that you need. Subscribe to the channel. That is all for today. Bye.